Hello everyone, I am Pratap here. We are at lesson 3, components of a zone and other supporting concepts. Let's start with components of a zone. A zone should have 3 components. The first component is leg in, the second component is base, and the third component is leg out. So let's start with base. We have already seen this chart in our previous lesson, and we have identified this as a demand zone, and we have identified this as a supply zone. And strictly speaking, these components are called as base. This is the base of a demand zone, and this one is the base of a supply zone. This is one of the 3 components of a zone. Why we are calling this as a base? We already learned 2 types of candles in supply and demand zone price action theory. One is a narrow range candle. Those narrow range candles are also called as base candles. See, all these 3 candles are base candles. That's why this entire area is called as a base. And look into this. Here also these 2 candles are called as base candles. That's why this area is called as a base. And look into this candle and assume this is the most recent candle on the chart. And how many bases we have? 2 bases. One base is related to supply zone and another base is related to the demand zone. And compare these 2 bases with this candle. Even before that, how many horizontal lines a base is having? 2 lines. One is the base high line and another one is the base low line. Similarly, here also, this is the base high line, this is the base low line. Okay, when you are comparing both these bases with the current candle, which line is the nearest among these 2? Similarly, here also among these 2. And this line, the low line of this base, is the nearest. And what about here? The high line of this base is the nearest to this candle. This is the nearest this line is the nearest to the candle. Similarly, here also this line is the nearest to the candle. So let me show you both the lines. So this is the nearest line, and here this is the nearest line. And these nearest lines to the current candle are called as proximal line. They are called as proximal line. Proximal line is always nearest to the current candle, or we can say nearest to the current price. And which lines are not nearest, are having more distance? This is having more distance. Compare it to this one. Similarly, this line is having the more distance. Compare it to this line. And we can also call them as a farthest line. This is the, if these 2 are nearest lines, and then this one and this one are called as farthest line. Let me mark those lines. And this is the one, and here this is the one. And these farthest lines are having more distance to the current price. They are called as distal lines. So that means every base is having two lines. One is the proximal line and another one is the distal line. And the line that is near to the price is called as proximal line. The price which is far is called as a distal line. And these two terms are very important. You must memorize these two names, proximal line and distal line. You must memorize those names. They are very important, and throughout the course you will be talking about these two lines. So this is about the base. And the next one is, the next component is legging. This is the candle before the formation of the base. And the candle is a ERC candle, expanded range candle. And what is the technical name for ERC? Leg. In the previous lessons we learned leg is nothing but ERC candle. ERC candle are also called as leg candle. So during that lesson I told you, instead of using the word ERC, expanded range candle, we use leg candle. We use the word or we use the term leg candle. That is what I told you. So from now onwards, narrow range candles we will call as a base candles, and ERC candles, that is expanded range candles, are called as leg candles. From now onwards we will be using the terms leg candle and base candle. Okay, the candle that should be available before the base formation is called as a leg candle. And this, why we have given a name legging, the legging, because this leg candle is into the base. After the leg candle, a base should be formed. So that's why we have named it as legging. Similarly, here also, we should have a legging before the base. This is a rule. There should be a legging candle before the base. Otherwise, we should not qualify that as a base. So, we have a legging for the demand, we have a legging for the supply. And these two candles are called as legging candle. So, this is one of the components of a zone. A zone have three components. One is the legging and then base. And we have one more candle leg out that we will see very soon. And this legging candle could be a large candle or it could be even medium candles. Look into these candles. It is a medium size candle. A legging could be a medium size candle or it could be a large candle. Both are valid. So this is a legging and then we have a base. Here also we have a legging and then we have a base. Base is having two lines. One is a proximal line and another one is the distal line. The nearest to the price is proximal and the farthest to the price is the distal. And then we should have a leg out candle. This is called as a leg out. Prices are moving out of the base. That's why we named as a leg out. Here prices are coming into the base. That's why this is the legging. And here they are moving, this candle is moving out of the base. Similarly here also the prices are moving down out of the base. So this is a leg out. So both these candles are called as leg out candles. But here we have a rule. The leg out candle must be a large candle. It should not be a medium leg candle. It should not be. It should not be a medium leg out candle. So it should be a large candle, large leg candle. But what about leg-in? Leg-in can be a medium or it could be large. But leg out cannot be medium. It should be a large candle. So all the three components are available? Yes. Look into both these zones. This is the first zone, demand zone, and this is the second zone, supply zone. Any zone should have three components. The first component is leg in, and then we should have a base or base candles, and then we should have a leg out. Similarly, here also we have a leg in candle. After that, we have a base or base candles, and then we have a leg out. If the leg out is a rally candle, the leg out is a rally candle. What is rally? Do you remember the technical name? Bullish candle are called as rally candle. If the leg out is a rally candle, it is a demand zone. If the leg out candle is a drop candle, what is drop? Bearish candle. So bearish candle are called as a drop candle. If the leg out is a drop candle, it is a supply zone. That means a demand zone should have a rally candle as a leg out, and a supply zone should have a drop candle as a leg out. And these concepts you will be seeing in detail in the coming sessions. So the components of a zone, is it clear? Now let us look into all these components in detail in a chart. So we have a leg-in candle. Immediately after the leg-in, what we should have? We should have base candles. After the base, what we should have? After the base, what we should have? Leg out candle. And this is a demand zone because the prices are moving towards the up. That means demand exceeded the supply here. That is what? Imbalance in the price. So we are calling it as a demand zone. Now leg-in is formed. Immediately after leg-in, we should have base candles. So these candles created a base. So any base we have a proximal line and also we have distal line. And now what happened? Or what should happen? We should have a leg out. What this leg out is doing? Moving the price down. So it is a supply zone. So this is the way demand and supply zones will be created. If you want to create a demand zone, you should have three components. One is the leg in, second one is the base, and third one is the leg out, but the leg out should be a rally candle. That leg out should be a rally candle. Now it created a demand zone. And similarly, for a supply zone, we have a first component is a leg in, and the second component is the base, and then the third component is a leg out. What kind of leg out? It should be a drop candle. So these are the three components of a zone. Now what's happening? Prices are entered into the demand zone. Demand zone pushed the price up, and then prices are went into the supply zone, and supply zone pushed the prices down. Please look into the high of this demand zone. This is called as zone high. Exactly the same way, look into the high of this supply zone. This is called as zone high. Now please look into the low of this demand zone. This is called as zone low. Exactly the same way, the low of the supply zone, that is called as zone low. The terms zone high and zone low, they are very important. You might ask a question. Already we are having proximal line and distal line. Why again we introduced zone high and zone low? What is the reason? There is a reason behind this. Proximal line and distal line can be altered. That means they can be changed. But zone high and zone low, once you identify, they remains constant. They cannot be changed. So you might ask another question. How can we change proximal line and distal line? You are going to learn few important concepts in the upcoming sessions. Some of the concepts like risk management and stop buffers. Stop buffers are also called stop loss buffer. And those concepts will alter your proximal line placement and distal line placement. That means they can be changed according to those concepts. But still, your zone high and zone low, they remain constant. They cannot be changed. So that is the reason why in Neostock reports generated by the Neostock software, we are using zone high and zone low in our reports. But the concepts you are going to learn in the upcoming sessions, and by using those concepts, you can alter proximal line and distal line according to your risk management. So this is a very important concept you should remember. So before closing today's session, let us quickly summarize all the important points we have learned in this session. We have learned three important components of a zone. The first one is leg in. Leg in should always be a leg candle, and it could be a medium size leg candle or large size leg candle. It can be anything. And then we have a base. A base is having base candles, and also we have zone high and zone low, and which are constant and they cannot be changed. And also we are having two more lines, proximal line and distal line, and they can be altered based on risk management concepts you will be learning in the upcoming sessions. And the third component of a zone is leg out. Leg out is a leg candle, but it should always be a large leg out candle. Leg out should not be a medium leg candle. And for a demand zone, the leg out should always be a rally candle. And for a supply zone, the leg out should always be a drop candle. Now you might ask a question. What about legging? Should it be a rally candle or a drop candle? Do we have any rules? No rules. For a demand zone, your legging could be a rally candle or a drop candle. That could be a medium size, that could be a large size. Exactly the same way, for a supply zone, your legging candle should be a drop candle or a rally candle. That could be a medium size candle or a large candle. But the rule is the candle should be a leg candle. But leg out also, the candle should be a leg candle, but it should always be a large candle for a leg out. So this is the summary of what we have learned in today's session. In the next session, you will be learning zone patterns and distal line placement based on these zone patterns. I hope the information in this video is useful to you. If you are having any questions, please put them in the comment section. I will try to clarify all your questions. Thank you.